Hey, YouTube, what's going on? Chris here. Want to bring you guys a little update on Bitcoin. We're going to be talking about it, guys, and if I feel like we're going to be having a breakdown here. So what I want to go through with you guys is Bitcoin in a bearish pennant right now. So that's what we're going to talk about, guys. We're going to dig deep into it. We're going to read a little bit about it and see if we can kind of decipher this or not. If you guys could, like, subscribe, hit that notification bell. Also, guys, I had a question for you. I want you to put down there, do you feel as though after we go through this stuff, do you feel as though we are in this bearish pennant and we're going to have a break to the downside, or do you feel like, because we're kind of in this little symmetrical triangle as well, we could break to the upside? What do you guys think? I want your opinion. So we're going to go through a few things here, guys. So first, this is what we're seeing here. We kind of have our flagpole, which was a reaction low. We went to a reaction low. Now you see we've been kind of fighting in here, guys. So what we're having is higher lows. So we're moving up here, but we're having lower highs. So we're going to that squeezing point. And what you're seeing also is that volume has been tapering down. And that's what you're also going to have during one of these bear pennants. So I'm going to read just a couple points to you here, guys. So it says vital signs for a bear pennant. Bearish pennant formations involve two distinct parts: a near vertical high volume flagpole and a symmetrical low volume triangle. So guys, what did we have here? This was on huge volume. You see this stick right here, this big fall, this flagpole. And now as we've been consolidating, moving sideways here, moving up and down in this, what has happened with the volume? It's been going down. So far that's kind of 2 for 2 here. And that points to a potential downside breakout, guys. It says the next part, the triangular consolidation during the formation of the pennant is very much like the symmetrical triangle, and this implies that traders feel comfortable with the current price. So you can see, since we had our low around December 15th there, we've been moving sideways in here, so people have felt somewhat comfortable with the price and where it's at right now. So that's another key sign that this could be that bearish pennant. And then it says, most bearish pennants patterns occur at the middle of the larger move lower for a stock. Next one, guys, downside breakouts often lead to 2% to 3% declines, followed by an immediate test of the breakout level. If the stock closes above this level, now resistance for any reason, the pattern becomes invalid. So say we break down here, guys, and we come back up and we get back inside and we close inside this trend line right here, that means the whole pattern's invalid. Because a lot of times you'll have the breakout like we've talked about, then you'll come back and test this, and then we'll have another further fall. That happens about half the time, and then another half the time you just have that break. You just have that big break. Like right here, guys, when we broke here, we really didn't come back up and test it much. We had this little flag here, and then we just kept moving. So we didn't come back up and test the bottom of what would have been this descending triangle. So we could put that there, and you see it never came back to it. So sometimes the breaks are so hard and they're so extreme. That's why we have to watch the candles and different things, because you may not be able to catch them. You may not have that return to the trend line. All right, guys, let's see. The next one, it says to swing trade, sell short on the breakout below or on a pullback to that trend line, they said, guys. Place stop to cover 5% or so above the breakout in case you are wrong. So say you felt like right now we're going to break this, or you have a little clue that we're going to break this, guys, or you see it starting to break it, you'd put your stop up here a little bit more and then take that ride and see if you're right, and then try to ride it down. That's typically the best thing to do, is always put those stop losses into place. So if you're wrong, yeah, you lost a little bit, you lost a couple percentage or whatever, but you didn't get crushed. You know, say all of a sudden this goes against us, some big whale comes in and we break out through here and we start running, guys, and we come up and test this area. You know, it could be huge if you didn't have a buy stop order in terms of if you're going short. I mean, it could absolutely just crush you, because with short prices, the stock price can keep going up, so it's even more dangerous because you're also borrowing stock as well than when you go long. So typically going short is more dangerous, but it's only more dangerous if you don't use a stop. If you use a stop, then, guys, you're going to get stopped out. It's the same thing as going long. So there's nothing really to be scared about there, as long as you're smart and you use a stop loss. Guys, next thing I just wanted to point out for you here too, we did have a little bit of a break right there, and it almost looks like on the RSI that we're retesting it. So we're going to have to see if we continue to fall down, guys, what's going to happen today. Today's close is going to be very, very important. Another thing I wanted to show you was an actual bear pennant that I pulled up. So guys, this is what we're going to watch right in here, okay? You can see we're flirting with that line. But take a look at this and you tell me if it looks very similar. Here's our big push down. You see, guys, we're going up and down, moving in here, and then we broke down to that downside. And you see this did not come back up and retest. You had this quick little, it almost looks like a like a doji almost. I don't know if that's a lower line here, guys. I can't tell or not. Or an inverted hammer. It's hard to see, for me at least. But we had this big breakout here. Then we had our reaction. And then we went even lower than that. But you can see this is a big fall, guys. And if this were to happen, this could take us down to that $3,000 level very easily and very quickly. It could go even more than that. And the way that we would figure this out, guys, what we're going to do here, let me get this stuff off here. We're actually going to measure that flagpole, and we're going to kind of put our breakout point. All right, so that came on really big volume there, guys, and this is basically what I'm going to do here. I'm going to take this price range tool from about right here, that big break. We'll say that's our mast right there. So about 43%, guys, is the potential break that we could have. Let's see where that would put us if this does pan out. And it's always good to have these targets, guys. Downside targets, upside targets. So 43%, if we took that here, say it broke right there, guys. 1 second. So we would be targeting close to that. Guys, it could put us as $2,000. And I know a lot of people have been calling that. It really could be that type of a break. Like how you saw us go from here, that's 6,200 or whatever, guys. When that break occurred, I mean, we went all the way down to 3,200. So, I mean, this is life-changing opportunities. And say we do break that far to the downside, what could happen? Very well hit that 2,000. So that's to the downside, guys. Now to the upside here, we would come back up and potentially test this trend line. And if we closed up above that, there's a lot of room to run here. We could definitely run up to around that $5,600 area. But right now we're at the bottom, guys, of this triangle, and we really want to pay attention to that. Okay? And just like this, doesn't it look pretty similar, guys? You see? So that's what I wanted to bring to you. There could be a really, really big break that comes fairly soon, and I just wanted to warn you guys, like, to be prepared. You know, I'm not saying it's going to completely break to the downside. We may have more days where we're going up in here more to the apex, guys, and the closer you get to the apex, the less violent the break, from what I was reading, is going to be. Alright, so it wouldn't be as huge a break to the downside, but say we broke right here, it could be a massive fall to the downside, or say we broke up here, it could be a big run to the upside. But, you know, these are the things that I at least want to keep my eye out on, guys. And what I wanted to do as well, I have probably about half a page here that I could read you about bear pennants. And I'm going to read it to the people who want to stick around. Guys, we're not going to do much more charting, so if you guys don't want to listen to this anymore, you go ahead, click off. But for the people who want to learn about these bearish pennants and stuff, I'm going to read this, maybe 3/4 of a page to you quick. Bearish pennants are very close cousins to bear flags. In fact, there is only one major difference. The consolidation after the flagpole is triangular pennant shaped as opposed to being parallel flag shaped. So that's what we have there, guys. Like flags, pennants are favored among technical traders because they almost always lead to large and predictable price moves. Finally, like flags, pennants usually take shape at the midpoint of a major move higher. The first part of the bearish pennant pattern is often called the flagpole or mast. So that was that big fall here, guys, that we had. That's our flagpole or mast. During this phase, the stock price collapses to a reaction low, following some negative fundamental development. Very often this will be downside guidance, an unfavorable legal resolution, or a negative earnings surprise, but the change in price is near vertical, as would-be buyers are overwhelmed by frantic new sellers caught up in the euphoria of the moment. As the stock collapses, some speculators who were smart enough to have sold stock short at higher levels begin buying to cover short positions, and some less informed investors actually begin bargain hunting. At this point, the second phase of the pennant portion of the bearish pennant begins. Because the flow of new and investor sentiment the flow of news and investor sentiment is overwhelmingly negative, most of the stock bought by speculators is easily absorbed by nervous sellers in the beginning. But as time passes, selling pressures abate, and slowly the stock price begins to rise on dramatically reduced volume. So price going up, volume going down. It is bargain hunting that pushes the stock off the lows, but volume is so weak that the rally soon fizzles and the stock puts in a short-term top. With bearish sentiment still rampant, the next decline threatens to push the stock to fresh new lows. But as the decline begins, volume slows further and the bargain hunters become more enthusiastic. As the stock approaches the reaction low, price stabilizes and second short-term bottom is established at slightly higher levels. The fact the stock did not make a relative new low, bargain hunters once again begin buying the stock. This time the stock rallies but fails to move beyond the highs established. The lower high establishes the parameters of a very small symmetrical triangle pattern and becomes in the bearish pennant pattern. During the next 3 to 4 sessions, the stock trades in a narrow range and volume slows dramatically before beginning to slide towards the low established at C. So that's just giving me A, B, C, guys, working through that. Over the next 1 to 2 sessions, the stock moves through these lows, triggering a downside breakout. During the next session, several Wall Street firms make negative comments or reduce earning estimates, and a new leg lower begins. The stock opens lower and goes on to make significant new lows in the weeks ahead. So guys, I wanted to bring that to you, and you do your own research on these bearish pennants and all that stuff, and you tell me if we're in one. Do you think we're in one? Do you think we're breaking up? You know, there's always a chance you can break up out of these things, guys. It's more likely that you're going to go down. You know, it's like that 70-80% you're going to go down, but there's still, you know, a lot of manipulation, different things, so you have to be prepared on that upside and that downside as well. So if you guys have stuck around and listened to all that, I hope you enjoyed it. That was out of the Swing Trading Power Strategies book that I have. It has all different types of patterns and stuff like that. So I really wanted to bring it to you. And those who are still around, I thank you guys. And you're the ones who really want to work hard in this and continue to ride with me, guys. We're going to keep doing things, and we're going to educate, and we're going to keep moving. So if you could like, subscribe, and let me know what you're doing down low. God bless you all.